What's up, everyone? It's Caddy with Money Vesting. So we've got a big week on our hands. We've got not only some more updates and research and analysis coming out with what's going on with Silicon Valley Bank, but it's also going to be an inflation week. So we're going to get the CPI and the PPI reports on Tuesday and Wednesday. So we'll be breaking those down, and I will be going over the earnings week as well, because we do have a couple companies that are reporting earnings which are going to be important. So I hope you guys enjoyed this video and find it helpful. In my other videos, I will be doing specific dedicated analysis on inflation that's coming up. We'll be talking a little bit about the earnings and, of course, a lot of other leading indicators such as retail sales and, of course, consumer sentiment and some of the other indicators also that are going to be really important for the markets moving forward. Hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. And also, do check out the Discord and the Patreon link down below if you're interested in joining us. There is a 16% annual discount that will expire at the end of this month. So if you're interested to get the access to all the buy and sell alerts, options alerts, trade ideas, and of course, private videos as well, link's going to be down below. Another thing that I want to mention that I think is going to be very, very cool is that we have a brand new channel called Money Vesting Minutes, and it is going to be specifically focused on collaborations and other guest appearances with investors, analysts, strategists, professors. So our first episode is up and running, so you can see that on here. We had the honor to invite Professor Aswad Damodaran from the NYU Stern School of Business, talking about equity risk premium, inflation, recession, AI, all those things. So it is a short and concise interview, 15-minute long. So the first episode is on there. I will leave a link in the description if you want to check out the new channel called Money Vesting Minutes, and of course subscribe to that as well, because a lot of our guests who are going to be coming on board, all the videos will be posted on that channel, not this one. So make sure that you do check that out, and of course subscribe and watch that video as well. So this is going to be the earnings calendar for the upcoming week. We do have Zim Integrated Shipping reporting earnings Monday before the markets open. So Zim is definitely going to be on my watch list, as the tanker prices and, of course, shipping costs have skyrocketed during 2021, 2022. Zim Integrated Shipping did really well. The main selling point with that company was the dividend yield, but as prices have rolled over, as supply chains have gotten better, of course, Zim Integrated Shipping has dropped down with it. So that is definitely going to be on first Monday morning. GitLab is reporting. I'm also super interested in that company. I know that Tuesday people are going to be watching Skills and SentinelOne. Those are a couple companies that are going to be some interesting companies from a retail audience. And then on Wednesday, one of my favorite companies, Adobe, is going to be reporting earnings after the bell. So I will most likely be paying attention to that as well. I've been meaning to buy Adobe for a long time. So if it does drop on earnings, they have been pulling back a little bit because of their acquisition on Figma is being scrutinized by the Department of Justice. So if it continues to sell off, Adobe is definitely going to be on the watch list for Wednesday after the bell. UiPath, another AI stock, is going to be reporting on Wednesday as well after the bell. And then on Thursday, we've got Dollar General, we got FedEx, and then Friday, we got XPeng reporting earnings as well. So quite a few companies coming out. It's a handful. Adobe, Zim Integrated Shipping, UiPath, Dollar General, and FedEx. Those are 5 that I will be paying attention to very much. But let me know in the comment section down below if you have any companies in mind that you want me to go over specifically. Now, this is the earnings, this is the economic calendar. So we do have CPI, inflation numbers coming out on Tuesday, March 14th at around 8:30 a.m. Eastern. Of course, it's a market moving event. I will be live at 8 a.m. Eastern to cover that report, which is going to be incredibly important for the market. It's going to really dictate where we go with interest rates moving forward. It's really going to set the guidance for March 22nd. That's when the next Fed meeting is. And then the following day, on Wednesday, March 15th, we've got the MBA mortgage applications, which have been declining down to a 28-year low since 1995. They've come down to really, really low levels because mortgage application demand has plummeted because of higher interest rates. PPI, we're going to get the final demand for that. Retail sales is going to come out. Manufacturing index, business inventory, and the housing market index also scheduled to come out on Wednesday. And then on Thursday, March 16th, we got the housing starts and permits, jobless claims. We got the Philadelphia Fed manufacturing index, import-export prices. And Friday, we've got quadruple witching, right? So we've got a lot of stock options, futures, everything's kind of expiring on that day. There could be some increased volatility, and most certainly we will have the total vol index spike on that day. So Friday, March 17th is the third Friday of March, and it's the first quadruple witching Friday for 2023. And then we got the industrial production, we got consumer sentiment, and we got some leading indicators also coming out. When it comes to CPI, the consensus is 0.4% month over month. I will be going over my bear case, bull case, optimistic, and base case targets in my other video dedicated to inflation. So that's going to be released after. And CPI year over year, 6% is the consensus. And for us to come down from 6.4%, core CPI also expected to increase 0.4% month over month, and for year over year for us to also come down slightly down to 5.5%. That's the consensus for next week for CPI. For PPI month over month, 0.3%. Year over year for us to come down to 5.4%, and core PPI for us to increase 0.4% month over month and come down on a year over year basis down to 5.2%, and also excluding for trade services for us to increase 0.4%. So still an increase, but of course due to the comparables we are expected to come down on a year-over-year basis. Retail sales are expected to decline on a month-over-month basis. Of course, we saw a very, very strong number back in January. We saw retail sales absolutely explode 3% month-over-month, which definitely did once again increase some fears that the consumer is still very strong. It's consumer still spending quite a bit of money, and that pretty much led to the Federal Reserve once again to be very, very hawkish because of the tighter and a very, very strong retail sales number. And this month, it is expected that we are going to see a bit of a decline, 0.3%. X vehicles, a slight increase, and then X vehicle and gas for us to see a decline of almost 1% on a month-over-month basis. And finally, consumer sentiment, it's expected to remain pretty much unchanged at 67 for the month of March. Now, going over to the S&P 500, we are in a very delicate situation. So S&P 500 already starting to break down below that 200 simple moving average. So we're already starting to break down below this level. And the next support really for us to watch is going to be right here at 37.74. The valuation can still be argued as being a little bit on the rich side, trading at 17.5 times earnings on a forward 2023 basis. And this is without any more revisions coming in because the EPS estimate for this year is 222. And if you take into account 38.61, it might be a little bit lower now considering that we have sold off. 17.4 is where we're at. But if the earnings per share, which is that $222 number, comes down to, let's say, 210, all of a sudden we're trading at 18.3, 18.4 times earnings, which again can be argued as being a little bit on the high side. So support level is going to stay put at 37.74. This right here, very, very important level to watch all the way down to its October lows from just a little bit under 3,500. We'll see if this contagion, if this fear, if this entire debacle with Silicon Valley Bank and regional banks has the power to draw liquidity out. And of course, for us to see a little bit more downside in the markets, considering the macros as well. Again, time will tell, but inflation is going to be very, very important for next week. It's the big talking point, considering the Fed's policy for March 22nd is literally going to be riding on that inflation report. And then going over to the NASDAQ, we are starting to see a bit of a breakdown below that 200 SMA as well, coming down to its previous resistance from that lower high from back in January of 22. If you do get a bit of a breakdown here below this level, I wouldn't be surprised to see more downside, unfortunately. Objectively speaking, wouldn't be surprised for the NASDAQ to roll over even further and maybe come down to as low as 10,200, which is going to be its October low for the NASDAQ. So definitely keep a close eye on the T-Vol index. That's your New York Stock Exchange total volume. You can search that up on your trading view. So it usually does spike on quadruple witching Friday. So if you come over to this chart, all these spikes that you see on this chart are pretty much from quadruple witching, and they happen in the months of March. Then it happens in the month of June. We've got one in September and then another one in December. So March, June, September, December are the 4 times during the year when quadruple witching takes place, and this will most certainly spike on Friday with volumes reaching all the way up to whatever this large number is, and we could see an increase of 150 to 200% in the total volume for the New York Stock Exchange. So I hope you guys enjoyed this video and a complete update on what is coming up for next week. Jerome Powell is going to be having that FOMC meeting with the summary of economic projections, not this upcoming week, but the next week, March 22nd is when the meeting is. But of course, we've got inflation, and all eyes are going to be on how the federal government and the Federal Reserve and the Treasury Department pretty much handles the Silicon Valley situation, Silicon Valley Bank situation, as well as how FDIC intervenes and what happens with all the customers, investors, and other regional banks as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe, and also check out our other Money Investing Minutes channel as well if you want to get access to all the exclusive interviews and collaborations we do with other guests. As always, happy investing, and I'll see you all in the next video.